welcome to this Friday morning session on ESG. We're going to start with why does ESG actually matter to your company? Like, why is it a topic that you could or even should look into? Then we're going to hand over to Lisa, who's going to cover the ESG frameworks and standards, and we're going to go into a deep dive into some of them. Before we then actually move to a topic which we call ESG in action, which should give you a better overview of how to approach actually something like this. I will hand it over to our lovely speakers today to introduce themselves.
Hello, everyone. I'm Lisa. I'm the ESG reporting associate here at Plan A. That means I look into all the existing ESG frameworks and standards, but not only the voluntary ones, mainly, or like importantly, of course, also the regulations around ESG reporting, because there's more and more coming up. And yeah, I'm at Plan A, the one that looks into it, see how we can support clients and customers or the entire community with it, and see how we can, what ways we can go to offer it on the product.
And hello, everyone. My name is Rachie, and I work in the customer success team at Plan A, and supporting and helping all the companies and clients along their sustainability journey. And prior to joining Plan A, I work as an analyst in a Paris-based think tank with focus on climate strategy and disclosure. Today, together with Lisa, and we are going to give you an overview to all of you who are maybe curious, interested, or would like to embark on the ESG reporting journey, all the fundamental information that's necessary for you to embark on the journey. Yeah, so far so good. So let's jump into the topic. Next slide, please. So first, we're going to start off with a very fundamental question for the ESG fundamentals. Why does it matter to your business? Well, why are we all gathering here today for this session? Obviously, it matters to every one of us to some extent, more or less, no matter whether you know the reason or you're not aware of it yet. This notion becomes very popular in the business arena since 1960s, and it has been increasingly important and embedded in every aspect of your business arena recent years. Next slide, please. So in general, we kind of categorize all the drivers of ESG reporting into two parts. The explicit drivers, for example, all the drivers that undoubtedly putting a pressure on your business, for example, investors, those people who put money in your business. Now more and more investors have realized the importance of this topic and kind of consider it as a very fundamental and crucial factor when they're analyzing, evaluating business, whether they are resilient or not in the future to the future changes, or whether they're healthy enough or not for a long-term development. For example, according to a Bloomberg report, apparently by 2025, the ESG asset might hit $53 trillion. That's a lot of potential on the investment side. And the next driver is legislation. And Lisa is going to dive in a little bit deeper in the next chapter, but just look at how the wind turns around among investors, and by definition, ESG literally, it obviously have a political, financial, or social impact, and that will lead to the introduction of of a lot of regulations gradually moving forward, which actually already happening. And now let's look at the other side, the implicit drivers. So those are the drivers that might not communicate with you loudly or putting a pressure on you, but they are inherently part of your business. So to some point, you have to address it and deal with it more or less voluntarily. For example, consumers. Just like investors, they put money in your product and use your product. And now more and more consumers also start to want to have a sustainable life themselves. For example, according to a research, 1 out of 4 consumers in the UK, US, and Australia, they actually have claimed that they actually switch or stop the use of one brand that has ESG concerns. And the next one is employees. Well, this is pretty obvious. I guess all of us are employees, or at least once employees. And we all would like to work for a business with good causes, for example, fairer incentive structures or inclusive environment or culture. It does not only make us feel more rewarded or more motivated, or it also makes us be more productive, efficiently working for our employers. So this is also a good bonus for employer, the company point of view. And then last but not least, because all the drivers that I've said so far, they actually all have an impact on your business and actually have the same impact on all the other competitors and peers in the market too. And as of a fact, actually this year, the ESG market is set double. And there are more and more companies just like you starting to consider this problem, and also from the competition point of view too. And so now I will hand it over to Lisa to dive in a little bit deeper on the regulatory aspect.
Thank you, Rachel. So now that we have looked into why ESG reporting or even the assessment of ESG criteria might be important for your business, let's take a closer look into the existing reporting standards or frameworks that exist and that you might want to or might have to report on. Next slide, please. So when you start looking into ESG reporting, you encounter a number of different abbreviations. Like I'm sure you've heard of CDP, CSRD, SFDR, all those abbreviations. And not only do you encounter different abbreviations, you even encounter different words for ESG reporting. Like there's ESG frameworks, there's ESG standards, lately even ESG regulations. And I'm sure this is very confusing and overwhelming at the start. So we actually want to help you there a little bit and start explaining the difference between a framework and a standard, and also look into how frameworks and standard might correlate with regulations or regulatory requirements. As a start, an ESG framework. So the ESG framework is a bit more of a guideline that provides principle-based guidance on how the information that you want to report on or that you should report on according to this framework is structured, how it should be repaired, and also what broad topics should be covered. Broad topics as in environmental, social, and governance, but there's might be also others. But those are the three main topics. And frameworks are a bit less valuable in regards to comparability, because a framework is more up to the interpretation of an individual user of this framework. So it still leaves like room for confusion for the market or for investors or whoever is interested in your ESG performance. Whereas an ESG standard is a bit more straightforward, because ESG standards provide specific, detailed, and replicable requirements for what should be reported in each topic, including the metrics that you need or should report on. And therefore, an ESG standard is way more valuable in regards to comparability, consistency, and also reliability in disclosures. Both frameworks and standards can be mandatory or voluntary. We'll take a closer look into that in the coming slides. And maybe one more thing to say on that remark. So if you look at it right now, I would say there's more frameworks than standards on the market, but with the fight against greenwashing and the growing interest of the market, investors, and regulators for ESG reporting and the importance of it and the comparability of it and true transparency, the trend is leading more towards standards. So whether an ESG standard or framework applies to your business mainly depends on the country you operate in or the jurisdiction in the case of the European Union or region even, the number of employees and your annual turnover or balance sheet. And if you could go to the next slide, Nicole. We have created this matrix of the most popular or important, not only frameworks and standards, but also upcoming or existing regulations. I understand that this can be a bit overwhelming now, so this should just give you a little overlook. You see here there's frameworks or regulations or standards that are globally usable. There's also ones that are only applied for the EU or the UK or US. I'm sure also of other countries, but we had to make some choices here. So we went for the like ones that are most important for us as a company and of course our clients. yeah, unfortunately, we don't. So yeah, just as a start, you see here, you see some of them are still in progress, indicated by those little lines. Some of them are already in place. You see here the number of companies who have to report on them or who do report on them in case of the voluntary ones. But yeah, like we of course we don't have the time to dive deep into all of them and into the matrix. So we had to make some choices in which one we want to dive a bit deeper into, and we decided to go for the regulations that are in the European Union, mainly because some of them don't only require EU companies, but also non-EU companies to report on them. But more on that in the following slides. The first one that we want to talk about briefly is the Non-Financial Reporting Directive. The Non-Financial Reporting Directive has required companies in scope since 2018 to publish a non-financial report on their ESG performance together with their management report. Companies who have to report on the NFRD are large EU companies of public interest. Large in that case means they need to have more than 500 employees and a balance sheet of more than 20 million or a turnover of more than 40 million. You need to fulfill 2 out of those 3 criteria to be in scope. And you need to be of public interest, meaning you have to be listed on one of the member states' stock exchanges, or you have to be a bank or an insurance company. The required indicators that you have to report on in your ESG report and your NFRD ESG report reach from environmental to social, human rights, and anti-corruption and bribery factors. And there is, and now we're coming back to the framework and standard topic. For the NFRD, there is no clear reporting standard, but only EU guidelines on the reporting. And those guidelines are more or less like a framework. So they give you ideas they give you those four big sectors like environmental, social, human rights, and anti-corruption and bribery. But they don't give you like a clear standard. They don't tell you have to report on this indicator in that format. They just give you ideas. If you're of this industry, you might want to report on this. So it's actually very, again, up to the interpretation of the individual users. And that leaves businesses confused, and maybe not necessarily confused. But if you look at it, if you look at existing NFRD reports, they actually, most of them look very different, and that also leaves the market confused, that leaves investors confused, and also leaves auditing and insurance companies confused. And as it is a directive, an EU directive, how it works is it needs to be translated into the single member state's national law. So there might be even slight differences between the different member states. So yeah, as you can see, it is not a clear standard, and it still leaves room for confusion, and there's actually a lot of room for improvement. And this is why, if you could go to the next slide, the NFRD currently is being amended into the Corporate Sustainability Reporting Directive. The Corporate Sustainability Reporting Directive amends the scope and the reporting requirements of the NFRD. About the scope, other than the NFRD, in the case of the CSRD, companies with more than 250 employees will be in scope that have either a bigger turnover than 40 million again, or a bigger balance sheet of 20 million again. And also again here, like for the NFRD, you actually have to fulfill 2 out of those 3 criteria. So if you have more than 40 million and more than 20 million, you don't even have to meet the 200 plus 250 employees criteria. Other companies in scope here are all listed companies. They are all EU listed companies except micro enterprises. This is enterprises with less than 10 employees. And here is the global aspect of this regulation coming into place. Non-EU companies with subsidiaries also have to report on the CSRD if they make more than 150 million turnover on the EU market. And so yeah, again, the CSRD, as you can see, widens the scope of the companies who have to report. but it also introduces more detailed reporting requirements and a wider scope of reporting requirements. So additionally to the things that you have to report on in your NFRD report, or businesses have to report on in their NFRD report, they also have to start looking into the double materiality. That means they don't only have to report on the impact they make as a company on sustainability factors, they also have to report on how sustainability factors can impact them as a company. As one example, and it's a very simple and maybe silly one, but I just want to make sure that I can explain it well. One example of it would be you are a construction company and you build a lot of houses around the seaside. And this actually means that your financial performance might be in peril because of climate change, because the sea levels are rising. So you might have to decide to build less houses on this because it's on the seaside. Or another example could be more on the social side, that you might be a clothing company and you don't look a lot into the human rights in your supply chain. And this could cause you a loss of income, because more and more customers are looking into human rights in the supply chain, or sustainability in clothing.
Ciao.
So besides this double materiality in your CSRD report, you will also have to start including more forward-looking information, like including targets that you might set as a company, but also the progress you make on those targets. And a huge step in comparison to the NFRD is that companies will have to start reporting according to mandatory EU sustainability reporting standards. So this is to then actually have the comparison to other companies. And therefore, it also makes it easier for audit and assurance companies. And there will be, with the CSRD, also the introduction of mandatory audit and assurance standards. Because for the NFRD currently, for example, in Germany, there's only a check if you include a non-financial report in your management report. They don't even check the content of it. And that will change with the CSRD. There will be a standard for the auditing and also the content check of what you publish. And the application date will start to be phased in from 2025. And that means that companies who are already reporting on the NFRD will have to start reporting in 2025 for the year 2024. Then the other large companies will have to start reporting in 2026 for the year 2025. And small and medium-sized enterprises will have to start reporting in 2027 for the year 2026, since I'm almost done. If you are a non-EU company, you will only have to start reporting in 2029. So yeah, that was it about the CSRD. I would like to now look a bit closer to one of the regulations that is actually industry specific. If you could go to the next slide. That is the Sustainable Finance Disclosure Regulation. Maybe you've heard of it, maybe not. The Sustainable Finance Disclosure Regulation requires financial market participants to disclose how they consider sustainability-related impacts in their investment decision. The companies in scope are all financial market participants, but not only the ones in the EU, but also all the ones that offer financial products on the EU market. So if, for example, you are an US-based VC and one of your funds also finances a EU-based company, you also have to look into SFDR reporting. This is why as a region we put EU plus global. And the status says plus minus affected, meaning that some of the reporting requirements are already in place. Some of them will start to be reported on in January 2023. The SFDR aims to provide more transparency on sustainability within the financial markets, also in a standardized way. So we have a standard again to reorient capital flows towards sustainable investments, and therefore prevent greenwashing and ensure comparability. And the reporting requirements of the SFRD will be both on entity and product level. and there will be reporting standards for both. Entity level, meaning if you are a financial market participant and you will have to report, for example, or disclose the policies that you use on the integration of sustainability risk and investment decisions, but you also have to report on the principal adverse impact that you make as an entity on sustainability factors. And product level disclosures means that, again, if you are ABC and you offer funds, you also have to look into the sustainability of this fund. And this actually is, I think this is the most challenging bit, because that means that you will need sustainability data from all your portfolio companies in order to report on the sustainability of your product. And just a tiny little deep dive into the product level disclosure. We don't have the time to get too deep into it, but probably if you're a financial market participant, you've heard of the Article 6, 8, and 9 differentiation, because there's actually a differentiation between those differently classified financial products in regards of the reporting requirements. And a small look into it is just that Article 6 products are financial products that do not claim any environmental or like any ESG objectives whatsoever. Then there is the Article 8 products. They are called the light green products. Those are products that promote somehow environmental or social factors. And then there is the Article 9 products that are products that actually have sustainable investment as their core objective. And one of the differences between reporting for Article 6 products in comparison to Article 8 and 9 products is the disclosure of your EU taxonomy alignment. You have to do that for 8 and 9. And that leads me to the next slide. The EU taxonomy. The EU taxonomy is a classification, as it's from an EU regulation too, and the taxonomy is a classification that sets criteria to determine whether an economic activity significantly contributes to the 6 environmental objectives that are defined by the regulation. Those environmental objectives being climate change mitigation, climate change adaptation, sustainable use and protection of water and marine resources, transition to a circular economy, pollution prevention and control, and protection of healthy ecosystems. The EU taxonomy is applicable for all companies that are in scope of the NFRD or in the coming CSRD, and also all companies that are in scope of the SFDR. So I feel like that many people think that the EU taxonomy will require an additional report, but that is not the case. The disclosures that you are required to do in accordance to the EU taxonomy will have to be disclosed with your non-financial report that you do for the NFRD or CSRD, or that you do for the SFDR. And the EU taxonomy is a tool to help companies and investors make sustainable investment decisions. And also, I feel like this is also a misunderstanding. Subjects to the EU taxonomy are obliged to report on their EU taxonomy alignment. They are not obliged to be taxonomy aligned. So this was our little deep dive into the four regulations around ESG reporting in the EU. If you could go to the next slide, Nicole. Yeah, just to get back to this matrix, you see we only covered like a minimum of what is out there, and there is, of course, I'm not sure if any of you are from the UK. You see we also have here the SECR that is very relevant for the UK, or also now since April 2022, the TCFD. So if you have any questions on those, please feel free to reach out, and we're happy to help, or also use the Q&A session in the end of this webinar.
Maybe we can use this slide to quickly take a break to see if there are any questions, or if people are ready to continue to the next part of the session. Okay, if everything is clear, thanks a lot, Lisa. Then I think the next part will be Rachie.
So just now, Lisa covered the regulatory part of this topic, and now I'm going to be responsible for the practical aspect of this topic, ESG in action. So how to get started on this journey, what steps are needed, etc. Next slide, please. So as I talked about earlier at the beginning of this session, the explicit and implicit factors. So now they are very important because they serve as the trigger to kick off the whole ESG reporting journey. And as a first step, next slide, please, Nicole. Thanks. So as the first step, it's also the most fundamental step, actually, because that defines really the direction and the trajectory of your ESG reporting process moving forward, which is determining motivation and accountability. This is very important because just as you can see just now from Lisa's session, the ESG market right now is still quite voluntary. There's obligation, but there's some obligation for some certain criteria depending on the framework and region. So in general, it's still quite voluntary and it's not much very clearly defined. As Lisa just now mentioned, there's a lot of interpretation situation going on, and there's also not a lot of defined pathways. So here is why it's very important to do from the first step to understand and checking with your own company and checking with yourself why you're wanting to doing it, what is your goal, what is your motivation, and who do you want to showcase this to, which means aka your stakeholder that you care the most about. For example, is it simply a reaction or response to an investor request, or is it a customer feedback, or is it a mandate by your board members, or simply just pressed by a certain regulation? No, so whatever the reason is, or maybe it's also internal engagement, right? So whatever the reason is really important to check in with yourself and reflect on this topic, so that you can stick with your company value and also stay true of your own company in this kind of fast changing and fast growing market. So ideally, it should be start off with a strategy report, like a proper ESG strategy, so that you can company-wise align on your value, strategy, implementation, operation, etc. But if you haven't have it yet, keeping at least a list of the check-off boxes of your core values is also very important for you to stick with yourself and with your own company's value. And also that will also help you as a first step to use to improve and develop your ESG strategy. Next step, please. And now we know where we're going to go and which direction we want to have and what is our general expectation. Then it's time to choose an appropriate ESG standard or framework or regulation. So this step echoed what Lisa talked about just now in the previous session. All these factors, as you can see just now, she mentioned, there's a lot of factors that influence your geographical location, for example. So just like when you want to do online shopping, like get a Birkenstock shoes, and then you have to use the filtering function to narrow down whether it's free delivery, what texture, whether it's sustainable, etc., etc. There are also a series of factors that can help you narrow down. For example, next slide, please, Nicole. So for example, your geographical location, certain framework or regulation is applicable in certain region, but it's not applicable in other regions. Or for example, whether it's obligatory or not. And that links to a lot of other factors. For example, just as Lisa said, the revenue, the size of your company, the legal status, etc., etc. And in general, the bigger the company is, your organization is, or the more revenue you have, there's a higher likelihood that you are going to have more obligation to comply. But for the SMEs, the small and medium enterprises, maybe you will be a bit lost on which option to fit in because there might be less obligation for you. Then in this case, this is where the first step kicks in, right? Then you can check in with your own corporate roadmap, your strategy, your stakeholders, and listen to their opinion and to figure out maybe there's a certain topic that you would like to cover that people care the most about. Then you can also use this as the criteria to choose a framework or standard that suits you, because this is what you really care about actually. And next step, please. And then once you know what you want, and the next step is actually a bit more technical, because now you know what you want, and all you need to do is just get a tool to get it to disclose what you want to disclose. So usually, in the market, we usually use a set of, like a selection of questions to cover the ESG topics that you care the most about. So that those set of questions will have to be responded. So in the end, it will be an ESG report. So in this case, we call this selection of questions a survey. So just so you know, you're not going to be confused moving forward when I call something a survey. So this step is mainly about building and send out the survey about your ESG performance, or if you're a financial institution, the ESG performance of your portfolio company. Next slide, please, Nicole. And yes, so in this case, it will be a bit more technical. So you will need to, so this is a time for you, you can seek for third-party help. For example, at Plan A, we also help on this, but whoever you are working with, it's also important to realize that the final decision-making just lies in your hand. You also need to consider, before you find or seek for other people's help, to build a survey. For example, what is the capacity on your side dedicated to this report? For example, if you are a company or you're an investor who want to request from your portfolio company, then it's time to think about what kind of effort you expect from people who fill out those questions. How much time you would like them to allocate to filling it out, and how much time of the notice you would like to ask. So all this question is very important to help you to develop a survey. For example, if you know that you don't have a lot of expectation and people don't do much, then maybe you will realize that having a whole survey of 100 questions might be a little bit unrealistic for you, etc., etc. So here, this step, the building and sending out survey, is pretty technical, but also there's something that you have to consider moving forward. And then the next step, once you send out the survey, then now is the time to consolidate and validate your responses. And I can see here most of you are already in a process of collecting data for carbon emissions, or already have reached the first milestone of your baseline, your carbon emissions. So you guys might already have an idea of how it looks like when you're collecting data for your carbon emissions. So it's saying kind of go from here too. You're collecting data regarding your ESG performance, no matter from your company, also from your portfolio company. So then let's just think about the structure when you're collecting data for your carbon emissions. The first step is to inform others and mobilize other people so that they know why they're doing it and what they're working for. And also the second step is also, of course, to set up a structure with deadline, accountability, responsible people, so that you can create a structure that can make the whole consolidation process more efficiently. So here the keywords, next slide, please. So here the keyword is mobilization. So now it reverts back to the first step again, right? We talk about explicit trigger and implicit trigger. They're having an impact on you, so that make you want to dive in deeper on the ESG topic. So the same goes for people who are going to fill out that report too. So now it's also, this is important for you to convey this message for them, knowing that this is not a random question for administration. This is actually a selection of questions that actually want to have something for long-term resilience and development. And next step, please. I know it's a little bit tricky that you have to go step by step. And and then once you collect all your responses for ESG, then it's time for you to take a deep look at it and then to what's going on. And then here the keywords is insight and reflection. Next slide, please. And why? Because just as I said, that ESG market right now is still fast developing, and it's not really clearly defined. So every step you make is actually you're exploring yourself and then find a better way to be better react to the future. And not only you, everybody else is like this. Even the regulatory market is like this. So the insight here is very, very important, so that you figure out where you stand, what's your pain point, what are you good at. If you're a company who want to report for yourself, then now it's a time that you can straightforwardly have a look and how is your ESG performance on topic that you really care about, like strategically speaking. Maybe there will be some surprise popping up and you realize, oh, wow, like this is actually, I took it for granted, it's actually working like that, and actually it's not working like that. And now it's a time for you to realize, okay, maybe I should moving forward work on this. And if you are an investor, you requested reports from your portfolio company, and now you will have an aggregation of all the reports. And then you can either choose to dive in deep into each one of your portfolio company to check how is it going to each one of them, or you can go also aggregate everything together and then take a deeper look at how is the general situation of ESG performance in your portfolio in general, so that you can also strategically have a look at, okay, does it really fit into where I want to go in the future? And then if it doesn't fit, how can I move forward? Or, okay, maybe during the course of the data collection, of the ESG report collection, there's a lot of other things going on. You have more strategy coming out, more market player coming out, or more regulation coming out. Then you can strategize, okay, this is where I'm from and how I can improve moving forward. So it's all like a building up process. Next step, please. And the last step is communication. Well, we are all business who want to have a good cause and who want to live up to the purpose, but at the end of the day, we also want to showcase all the efforts to the stakeholders that we care about, right? Communication on the ESG performance help us to build up our reputation to our audience publicly, and also help you to be more transparency internally, externally, and also ESG also help you to prove that you are making an effort to live up to what you want to be. So this is very important. And when you communicate, it's also, again, let's highlight the first step. Look back to your motivation and your original story, and to take a look at what you want to communicate, and who you would like to communicate. So be sure that it's still aligned with your whole corporate strategy. So you're not doing this for someone else, and you're actually doing this for yourself. That helps you to be more resilient moving forward too. So you can convey the right message to the right audience. Next step, please. So here I actually give some examples of the reports, the ESG report, and what you can build into in the end. And on the right side, as you can see, many of you are very familiar. The first one is the carbon emissions report from our carbon emissions calculator. And this is actually definitely can be of use of part of your question of the environmental questions. And the other two pages, I just took a screenshot of our ESG report generated from an ESG model. But you can definitely, it's very flexible how you would like to use all those data. For example, on the left side, I also give some examples of some publicly disclosed reports from other company. For example, on the top side, there's you can definitely use all those performance results as the performance annex in any one of your reports that you would like to disclose. And on the left bottom corner, you can also use it as just like a regulation compliance report. For example, this example is TCFD. And also the right bottom corner is also something you can also use from your insight that you derive from your ESG performance and make it part of your ESG strategy or even annual report. And just to wanted to know that all the sample that we grade is, there's no like stance that we said they're the best. It's just to give you have an overlook, like an overview of, okay, you actually have some flexible use of it, and that's really depending on you. And again, that's really still go back to your own story and your own narrative. Yeah, and this is actually just the end of my part. And the next slide, I think, is a key takeaway. If anybody have questions, feel free to ask it out.
Thanks a lot for watching this webinar. I wish you a wonderful rest of your day, and feel free to reach out if you have any questions.